Welcome back to the Explainer, everyone. Okay, let's dive into this because, wow, we have a genuinely fascinating trajectory to map out today. We are looking at a protocol that is just hitting the gas pedal so hard on growth, expansion, and raw metrics. I mean, we all know the decentralized finance landscape moves at breakneck speed. It honestly feels like dog years sometimes, right? But what we're seeing right now with Strike Finance, it's a literal masterclass in scaling rapidly while actually maintaining underlying profitability. Let's unpack exactly how they're pulling this off.
So right here, we have the core brand of Strike Finance. Their whole ethos is incredibly straightforward: strike fast. And honestly, looking at their recent development cycles, they are absolutely living up to that mantra. They aren't just building in the background. They are aggressively expanding their entire ecosystem across multiple fronts. From integrating new blockchains to deploying some really substantial updates to their trading engine, the sheer velocity of their shipments over the last few weeks is, well, it's something you rarely see executed this smoothly.
And that velocity brings us straight to the metrics because the data surrounding their V2 launch is just exploding. Keep in mind, Strike V2 has only been live for about 3 months. In the world of DeFi, 3 months is a blink of an eye. Yet, in that incredibly short window, they've seen nonstop month-over-month growth, practically doubling in volume, revenue, and open interest. They're fundamentally changing their own scale, which actually leads us to this massive milestone.
$100 million. Yeah, Strike Finance's V2 has officially surpassed $100 million in trading volume. Breaking a 9-figure psychological barrier like that in just 3 months, that is a major validator for any decentralized exchange. It tells us that not only is the underlying tech holding up under heavy load, but there's a deep, sustained market demand for the product they've built. Traders aren't just dipping their toes in the water, they are bringing serious capital to the table. And speaking of capital, heading right into July, Strike is just smashing through all-time highs across the board. They just crossed a brand new all-time high in open interest, pushing past $1.6 million. Total value locked, or TVL, is also sitting right at record highs. Now, these aren't just vanity metrics. Rising open interest tells us that active, leveraged money is flowing into the protocol and actually staying there. It proves traders really trust the platform's execution and liquidity.
Section 1. Expanding the ecosystem. Hello, Salah.
So their strategy here is super bold. Strike Finance is already the absolute largest decentralized application on the Cardano blockchain. But rather than just resting on their laurels in a market they already dominate, they're venturing into a brand new, highly competitive frontier. They have officially gone live on the Solana mainnet. This is a pivotal cross-chain move, guys, basically bridging their established dominance on Cardano with the hyper-fast, high-volume trading environment of Solana.
And what's absolutely crucial here is how frictionless they've made this expansion. Users can literally just connect their favorite Solana wallet and immediately start trading or providing liquidity. It's totally seamless. Plus, in just the last 24 hours of these updates, they also launched Aave LP support, so they are methodically removing barriers to entry, making it as easy as humanly possible for liquidity and users from totally different ecosystems to flow directly into Strike.
Section 2. The Arsenal. New features and TradFi assets.
And this brilliantly illustrates how Strike is blurring the lines between traditional finance and DeFi. They aren't just listing crypto tokens anymore. They are bringing incredibly popular traditional tech stocks on-chain, and they're doing it with up to 20x leverage. We're talking about Micron Technology, literally one of the most heavily traded assets globally right now. They've also added SanDisk and SK Hynix, which has consistently been the highest traded stock on the competitor platform Hyperliquid. They're directly targeting these high-demand, high-volume global assets to really reel in sophisticated traders. Now, to support those heavy-hitting traders, Strike just rolled out a massively requested feature, sub-accounts. If you're an advanced DeFi participant, you already know the massive headache of managing different risk profiles or complex trading strategies across totally separate wallets. It's an absolute nightmare for accounting and gas fees. Well, sub-accounts solve this. They allow users to seamlessly isolate and execute multiple independent trading strategies right there on a single venue. It's a real game changer for quality of life.
And to add even more fuel to the fire, Strike has just opened deposits for Cardano's largest stablecoin, USDCx. Integrating top-tier stablecoin liquidity is pretty much the lifeblood of any perpetuals exchange. It provides that rock-solid, reliable collateral foundation that traders need to execute these high-leverage strategies safely and efficiently.
Section 3. The engine, liquidity, and the Cardano treasury. Now, what's really interesting about this slide is the sheer capital efficiency of their liquidity engine. Just look at these metrics.
The Strike liquidity vault is currently sitting at $1.2 million in size. But off that base alone, it has already generated $126,000 in pure profit. Based on that exact trajectory, the vault is on track to profit well over $1 million this year for its liquidity providers. That is an astonishing yield profile, and it's literally the exact track record they're using to leverage their next big move. And that big move is a formal proposal to the Cardano treasury. As of the source materials, they are 2 weeks into the voting process, with 2 weeks left to go, and they are rapidly approaching a massive 300 million ADA yes votes. The protocol's pitch here is pretty simple. Use the Cardano treasury to back a project with strong historical profits, helping a native Cardano decentralized app compete on the global stage in the incredibly competitive perpetual sector. However, when we are dealing with decentralized treasuries, addressing risk is paramount. A prominent question regarding this proposal has naturally been, could the treasury's investment lose money? It is important we approach this objectively and look at exactly how the protocol itself addresses this concern. Strike Finance actually addresses this head-on with remarkable transparency. To quote them directly here, yes, there is risk. No investment is risk-free, and it's possible the vault could underperform. They make absolutely no attempt to disguise the inherent volatility of decentralized finance. They acknowledge the risk completely openly to the voting community. But while acknowledging that risk, they point directly right back to their operational track record. The data shows that both Strike V1 and V2 have generated strong returns for liquidity providers over an extended period, and both versions of the protocol are profitable all time. For the voting community, this historical performance serves as the primary objective evidence weighing against the acknowledged risks of the Treasury investment. Section 4. The future, decentralization, mobile, and aggregators.
Let's move to these upcoming catalysts and see how this builds out their long-term vision. On the tech side, the team is already focusing on V2.5 and V3 with a primary mandate to further decentralize the protocol and increase transparency, something they note is absolutely vital for attracting serious institutional players. Secondly, they're developing a mobile app to act as a seamless gateway for consistent retail trading. And finally, on the growth side, their Solana lead is actively working to connect Strike with the top perpetuals aggregators on the Solana network. That alone would basically open the floodgates to immense new routing volume.
Furthermore, the team has made it very clear that they aren't just resting all their hopes on a single treasury proposal. To feed this massive scaling engine, they need continuous liquidity, so they're actively exploring alternative routes to secure it, including strategies that would utilize their DAO tokens to incentivize and lock in deeper liquidity pools for the future. They are aggressively planning multiple steps ahead here. Which leaves us with this final thought. We're looking at a protocol that just smashed through $100 million in V2 volume in 3 months, successfully executed a major Solana mainnet launch, and is pulling traditional global equities into the decentralized world. With this kind of record-high volume and aggressive cross-chain expansion, how will Strike Finance's momentum reshape the broader DeFi landscape? It's a fascinating question that anyone watching the future of decentralized trading really needs to consider. Thank you for joining me for this explainer, and keep learning.